Hello guys, glad to have you on board again today. We're Tuesday. I was expecting to make the scalping video today, but it's going to be hard to make it for a very dumb reason. I basically lost an hour and a half earlier today recording pretty much a duplicate of this video because I stupidly recorded audio only without the screen. So I just wasted an hour and a half of my time, and it's just put me out of any rational schedule for the day, because there has been some major changes in the Discord. Some of you may have already noticed them, so I need to explain that to you. That's a top priority for me today. So the scalping video would just be delayed till Thursday. Don't worry, we'll take care of it anyway. It's just I think this is not the most appropriate timing. Have some more important priorities to take care of today. So later in the day I'll record a separate video explaining what other reworking stuffs into the Discord, what is going to be the new way of making it work and stuff like that. So I'll explain everything later today, probably this afternoon, and we'll see. All right. So earlier today I'm just going to do the usual Tuesday stuff as a replacement, kind of an intraday session, quick recap of Bitcoin's movement, because there's a lot of things happening in the nearby areas, and then we're going to move straight to the SPX to make our intraday analysis. So let's get this done. Bitcoins, this is what we have in the daily chart. That's beautiful. All right, so yesterday hold it up with a bullish candle close, instantly confirmed overnight, with the Asian session buying as well, breaking through the resistances. So there is no bearish market for now. All right, we might be eventually having built another major support. I don't nearly think we did, but I need to assess the possibility because we never know. All right. So I would still say, all right, what we said the other day is pretty concerning, like coming from bullishness to crazy fucking bearish engulfing daily structure. Nah, doesn't look good. Volatility afterwards in a very mature structure in a weekly resistant context. So no, like I said, it smells like blood, and I don't want to be too aggressive in these kinds of contexts. So I still recommend cautious, either for the bulls, both for the bulls and the bears. That's really, really necessary that you understand that in the current market situation, being too trendy in both directions is probably going to be proven wrong. I was trending bearish so far, and I got proven wrong. That's the reason why I triggered a stop loss yesterday at break even. So at my entry point, no gain, no loss. And the only mistake, big mistake I've made into my risk management was just to forget about this goddamn trade. Once again, I'm sorry, I'm not perfect. I should have seen this shit, and I didn't. And I really, really man, I can't find my word here today. So I'm sorry for this, because I dragged some people in with me saying that the actual trading area was lower, and I forgot about this to be the futures gap area. So this was definitely a technical area, and I decided to flush out this signal, which was a fucking exit. And I decided to do it in pure conscience, but just I forgot about an important area, the fucking gap area. So I should have profit taken in this area, and it would have avoided losing some money in here. Instead, I would have profit taken, and just I would have a safer approach in this area. All right, I shouldn't nearly have avoided this. I was too much bearish, and I forgot about this technical area. I was expecting to risk manage at lower prices. That was just stupid. I should have risk managed in here, and I would have a safer, way safer way to trade this stuff instead. So as we can see, we reversed out of a range target, which means now, yeah, we definitely are in a range. This range remains bearish orientated. All right, so far what we have is a bearish orientation in this range. We're trading into the resistant area. This thing just leads us to the possibility to trade bearish. Right, remember what it is. All right, it means that with this thing you're able, for experienced traders only, all right, so green guys, yellow guys, mostly yellow guys, you're able to trade at least 61% and in context. So you would have been able to trade starting this, all right? So I already done that. So this is the area you can start looking at selling entries. So this could have been a signal, but look at this. Remember that these signals require horizontal validation. All right, what is this level? This is nothing, all right? We don't reverse out of this area. We reverse out of this one. So this wasn't a tradable signal, or at least it was a freaking risky one. Moreover, I think I'm going to consider an update sooner or later, basically counting down the remaining bars until the context terminates. I'm just looking for a beautiful way to code this stuff, because that's another way of using the strategy that I want you guys to see. Like, it's going to be like a counter next to the last bar, basically telling you how much bar remains until the context box switches to a new one. Because when you'll get to close at the highs, just like we do in here, right? When you close at the highest movement throughout the box, this is generally not the base case scenario. It means this candle, which is a daily candle, is closing at the high. And generally, worst case scenario for sellers. So you'll avoid these signals when they appear right at the close of the context boxes. So that's an update I'm working on. Still looking forward for potential way to code this, and that's a mess because the Pine script isn't the easiest coding structure I've seen, not to say it's probably the most restricted one. So anyway, that's the area we can trade. 61% only for experience because we've got this. And so far, all we have is a taking profit signal without confirmation. So I would say pretty much wait for later today or eventually tomorrow to get to eventually reaching out closer to the 76% fib, hopefully getting an exit signal with it, which is going to be a great risk management for us, at least much better than the gray signals we've got so far. Regarding the crazy fucking high momentum we've had, I wouldn't expect anything less than a divergent or an exit signal to come right after. So wait for a better risk management seems to be the option to me right now. No signals, no trade. And obviously, you trade cautiously into this area. If you get into this trade, that doesn't mean it's going to reverse. It's just a range trade. Remember that this is risky. You don't bet the house on this. You just go with an average normal position sizing, a stop loss that is at least the size of the trend channel. So it will be a approximate 6 to 7% stop loss sizing. All right, and must not be more than 1 to 1.5% capital loss. So it will be low leverage. All right, and you trade accordingly. But you know how to handle fucking risk, fucking range trade. I hope you do right now. Right? If it does, it is a trade for everyone, which means we're third range boundary. First one, second one, been in 2 steps. All right, now we're reaching out to the resistant context. So we're looking out for the third boundary. Third boundary is the low risk one for everyone. All right, like we said, we're trading a range context. We don't know if it will actually be a range. We do trade it because that's how we do. All right, and so far all we can tell is that I don't see a bullish breakout out of this area. All right, so normally we're fine. All right. We've got decent risk management as bears to sell this area. For the bulls, those who've been supporting the prices, obviously you would have entered this price. There was not even a way you could have bought this area. So there's the only area you could have bought. And you're fine with that, all right? You would have bought, secured, confirmed, and now what is it? You're at break even, you have a guaranteed gain, and you just let it go, all right? If we pull back, then we're going to flush out your gain. You'll still have an early gain in this range. That's as simple as that. But remember that you've got a mandatory profit taking. You're supposed to profit take out of 76% fib in a potential range. So as a bears, this range isn't mature yet. You definitely have a profit taking to make in here. Remember that these are the rules in the strategy, all right? I don't know if I need to pull that up. It's a PDF manual. Remember the usual decision-making process paper you should have printed. When you go neutral range, what is the limit stage of the trade? It's 76% Fibonacci retracement. So out of 76% fib, you got to limit your trade. If you want to go bullish for further targets, I can understand that. But any fucking way, there is a risk management for you here as bulls. You got to profit take in here like a 25% profit taking or whatever, but you need to lock on some gains. That's absolutely necessary. All right? Bears will get in, bulls will profit take. That's how we risk manage. We should all see the same areas. Whether you buy or you sell the market is your own personal choices. What you're going to perform in the technical areas depends on this. All right? If you have chosen for a bullish bias, you'll risk manage. If you are chosen for a bearish bias, you'll sell and risk manage. All right, which means you'll have a stop loss. All right, all we care is that normally if there is a bearish signal in here, it has to reach out to the support context, so support trend channel, so you can secure the trade, pay for your stop loss, whatever shit this is. All we care about is that you take a low risk trade that you can falsely secure to get out of risk, and then see what the rest is going to be. The market will be the decision maker. Either we'll break through those areas, but hopefully even the bears will be risk managed until then, which means there will be no losses or a tiny loss. And if it works fine, then a much bigger gain. That's all we care about. And even the bulls will be nice, which means if we're in a range, then both of us will make money because both of us will just risk manage. That's it. All right. Now let's move to the SPX. And do the usual job. So how do we do this? We do the same old stuff. We go daily chart with the SPX. We have a look at the gap and caching structure. So are we trending in a daily? We could say yes. How far are we trending? We're in a bullish movement for 25 sessions, so 35 days of bullishness, 1 month in a very, very fucking mature movement. So yes, there could still be some bullishness. The momentum still remains bullish and has no problem with that. We don't see a trending market in the way that there is oscillation in the context sine wave. So we're just in a bullish cycle that still has some room to the upside. So we wouldn't be crazy fucking bearish at the moment. That doesn't nearly fit the plan. All we can say is that normally the support areas will act as support, and if we retrace, we're generally going to buy support areas. We've got a crazy fucking lots of gaps below right below us. This one, we've got another one in here. So lots of gaps, all right? So we need to assess this. We've been rising a little bit faster, probably too fast, thanks to Powell, obviously. But that's how it is, all right? But we do have an underlying gap in here, starting at 29.752, closing at 29.44 or 45. So that is the closest gap area. We had a previous gap in there that has been closed, so we're looking forward to close gaps at the moment, all right? And we need to assess that information. So put the 2 alerts like I did on the cash market, and remember that anytime we go close to 29.51, there is a gap that can either be a support or can be filled. Normally it probably is going to be filled, so look out for those technical areas. All right, we go 1 hour, we'll report the gap. So remember it was 29.51.7 to 29.44. all right, this is where we've got a gap. All right, so this is our gapping structure. All right, what else can you see? Remember that the 1 hour, the goal is to find a structure to this. Don't even have a look at the momentum yet, so we go full screen with the price. All right, and now we need to put a context to this. So what are the late stage signals we've got? Goddamn range, opposite squares, sounds like a range. All right, so we're in a range. Now let's make sense to this range. Ranges occurs after trending. All right, so did we have a bullish trend? Yes, we did. How do you see a bullish trend? When you have overlapping supports and resistance, all right? This support is built on top of the previous resistance, which means the bulls are trending. This trend is not an unusual one, all right, as this one has this structure, which is different than the usual ones. The one you usually see are accumulating, breaking, pullbacking, and final accessing. All right, in here we've done the opposite. We've done a different structure with a wave 1 extended, which means we trended and we pushed 2 times further. All right, that's the structure we have. In this structure, technicals are slightly different. I told you this already. I hope you learned this. That's mostly for the red, the yellow guys and whatever. When you are in those structures, when we can clearly see that the trending signal has been sent with the first wave, which is a rare case scenario, and the only reason we have that is because Powell has been reversing the previous bearish trend in here. So it's an unexpected market catalyst that has been reversing prices from bearish trend to bullish trend, because instead of building a range and breaking up, we trended earlier. All right, so wave 1 extended has a different structure afterwards, because generally, remember that in order to catch the final excess, I teach you to wait for prices outside context. In those structure, it's different, as this structure gives all its energy at the beginning and loses steam as it goes on. Generally, the final wave terminates inside the context instead of outside. All right, so in here, there is definitely a trade we could have taken, just needed the goddamn signal, as you can see, taking profit to exit, and prices now are reversing. So did we terminate this motive wave? Yes. So what are we fucking doing after a bullish trend? We bearish range. So the context is probably a bearish range on the 1 hour context. All right, so 1 hour context chart is probably bearish range. How do we deal with bearish trends, bearish range? We buy below the support context and we sell inside the resistant context with at least 61% retracement. So that is exactly what I'm going to trade right now. I think now we're about to look out for some supports, probably filling the gap or at least testing it to find some support below the contexts. All right. And only then and after we'll probably pull back to the resistant context and sell it. But this is probably not going to happen today. Right? So the resistant context, we don't care about it, because so far I think that's not the motive about that today. We're just bearish ranging, which means normally we should have 2 sets of bearish waves with impulses. So what we should see in the 15-minute context is trending context. Right? Remember that what a trending context is generally we'll do 5 sets of waves. We might be doing the third one. Could be an overlap, so we could retrace up to this area, find some selling activity, and normally make a 5th wave straight into our support area. Normally, we're targeting Fibonacci retracement. That's important for you to get that. When we're bearish ranging, we're retracing the bullish move. We're generally following support and demand areas as well. This is where we left some volume behind. All right? So this is the area in which there is some bullish support. So we could go down to those prices. Right? You can note them down. They're going to be interesting on the intraday scenarios. You can use the fixed range if you want to be more precise. So let's do the job. All right? You retrace wave after wave. So this is, that's stupid. What have I just said? Wave after wave. So this is how you'll be doing. All right, 2 volume areas. This is for aggressive traders only. Remember that this is only for the red guys. If you're a white guy, you don't even nearly use those stuff. All right, you just take care about the strategy. You know the 23% fib area is where you're going to look for support, is a mandatory profit taking for the bears. You don't target anywhere below the Fibonacci retracement, and if this one falls apart, then the next one is the 38% Fibonacci. Simple as that. All right? I would favor, for those who are the most aggressive, those 2 prices where the bulls will probably support the price. As you can see, they're slightly below the 23% fib. Simple as that. All right? Shouldn't nearly be complicated to you, all right? To me, it's pretty simple. I'm always using the same rules, all right? Next way is going to be retracing this area, all right? Where is the volume? In here, all right? So I shouldn't be using red lines because people will think that's a selling activity to do here, right? It's definitely not, all right? So we got this one and this one. I'll use different colors, so let's use some support lines. Yes, support lines. Come over, support lines and support lines. So these are volume supports, all right? Remember with that, remember about that. These are areas we care about. So you can put alerts on those levels. That's what I'll do, all right? Just about the first one. Okay. And as we do have our boundaries in the 1 hour chart, we're going to trade 15 minutes, like we said. Okay, so look out for 15 minutes. what is about to come? Range, and we've got early range signals in here, right? Suggesting we're getting close to the wave 4, which is the pullback stage in a trend. So what we do now is we're not following this trend. It could be mature, we could go a little bit lower. All we care about is that at the moment we should have some sideways action, all right? Some ranging activity before finding the pullback. So remember what the pullback rules are. Just put out your goddamn piece of paper. These are always the same rules. I'm not changing stuff. That's what matters in a strategy. You need to have consistency. So what are the rules? For a pullback, you need to go at least 50% of the context, all right? So here's your context. Your 50% context is approximately there. So we need at least to get on top of this level or close to this level. We need to pull back to the trend channel. So we probably get to the trend channel, all right? We need to build a range, all right? So it's going to be a range in a shorter time frame that we can trade aggressively. For experienced traders, you can go through a minute today. I'll explain that later on. Whenever you find this pullback, what do you want to see there? You want to see trending signals, like red signals, close to the trend channel, and you will sell those signals again. You'll be aware that there is a pullback. If we're still close to these tradable areas, normally you'll know that you can trade for a lower low, which is going to be the final excess. The final excess means we're going to go there, all right? Let's assume that this is what's going to happen, all right? Your resistance context, sorry about that, it's going to do this, all right? Your support context is going to do this. Sorry, it's going to slow down, all right? This is where your final excess will occur, below the support context, all right? So you don't know that this will happen. You'll just know that this is the next step for you to trade. And then you wait for the prices to either confirm or go against your plan. If it doesn't trigger your plan, you don't trade. If it goes according to the plan, you take the fucking trade if you have the signals. Remember that, like we said, the pullback must be traded inside the context, which means what you're going to be trading today is a 3-minute range. Simple as that, right? That you're going to try to keep open for a 15-minute final excess. So what we need in here is ranging activity. Do you see early ranging activity right now? No. So we might get a little lower than the current prices, like probably bang, all right, to terminate this nice trend. Looking for an excess, and then we'll build a range, right? Meaning that we'll probably retrace to the resistant context 1 time, probably break it 2 times, all right? Like building a range. We don't know what the structure will be, all right? Could be like that. Normal range structure, could be a triangle, all right? We could do like this, this, and this. We don't know, all right? We know that we're going to go from context to context for a bit into the 3-minute chart time frame. All right, so this is what you're going to be trading today, the goddamn 3-minute range. If you want to buy, which I strongly don't recommend, you wait and you buy below the context, all right? You're going to profit take whenever you reach out to the resistant context. What we're going to be doing, I'll give you this tip, for experienced traders as well only, you don't care about this if you're a white guy. You can use the moving averages, all right? This is, and I stand, this one is the most useful one out of my back tests. Use the 50 moving average, all right? 50 period moving average from the context. In here, each context box is 1 hour long, all right? You can see it goes from 7 a.m. to 8 a.m. So 1 hour context boxes. So this is the 50-hour moving average, right? What we need in here is probably ranging to catch up on this 15-hour moving average to find our pullback and go final excess. So that's my plan for today. I know today is a little bit complicated, but what is important for you is to understand the global process. How do I got to this conclusion? It's not that I magically pulled it out of a magical hat. It's just like I made the daily analysis. We see that there is a gap in here that's just attracting us like a magnet. We've seen as well that there might be a trending system in here in the 15-minute chart. All right, so we've made our 1 hour context analysis, all right, showing that we've got some support in here, some Fibonacci, some volume. So yes, we're definitely attracted by this area. We're probably going to go there whether you like it or not. So there is still some bearish moves to make. Therefore, we still have some bearish potential, and we're going to trade this. As the 15-minute move is already pretty mature, we've already made probably 2 sets of waves out of the 5 ones. or 2 bearish impulse out of the 3 ones we'll have. So what we have is a late stage trend context to trade on our intraday basis that we're going to try profiting from out of a 3-minute chart time frame, trying to catch up a pullback. All right? As simple as that. We're going to take a 15-minute context trade, but in order to take it, we're going to have to go trading the range in a 3-minute context. So how do you deal with that? Now, depending on your risk profiles, or if you're a beginner, you don't nearly even take this trade, it's kind of trendy, so you get the fuck out. You're not trying to buy the prices today. The only thing you're going to try doing is selling out of the resistant context, or you're going to try waiting for the range to be mature, and the only low risk trade for you will be the breakout. So you don't really give a shit about what this range will look like. All you care about is for this range to be matured. All right? You wait for it to mature, and if it happens today, that's fine. If it doesn't happen today and waits until tomorrow, then you'll not trade today and you'll trade tomorrow. All right? You really need to understand this process. Okay? It's really important for you to get that. We wait for a range, we wait to catch up on this trend line, on this moving average. We wait for a range to set itself. You trade the breakdown when the range is matured. That's for white guys. For green guys, I agree with you trading the range. All right. What you'll do is that you'll try trading the range third boundary, kind of trendy. You'll take an easy gain. And then you'll try trading the range fourth boundary if we go on an ABC. And if you see that we fail and when we make a triangle, you wait for the breakout. All right? You don't know what this range will look like. You don't have a goddamn clue. You don't try to anticipate range. All you care of is taking low risk trades inside this range. The low risk trade is always the third boundary out of 76% Fibonacci retracement. So if we made a first bullish impulse, you're going to try catching up the 76% Fib. All right, you secure the trade out of the resistant trend channel, and obviously, if you get to the opposite context channel, there is a fourth boundary trade range only for experienced traders. Others will wait for the breakout. I'll follow this on into Discord. I'll teach you each and every step of this thing. Anytime any of those trades will get to validate, I'll go messaging you into Discord. All right? So we'll take those scenarios all together. This is the plan. We'll wait to see if the market reacts accordingly or not. I'm no magician. I don't know what the fuck is going to happen. All I can tell is that I have a plan. I'll see if the market reacts accordingly. If it does, I'll trigger trades. If it doesn't, I'll do nothing. All right? That's the difference between me and a gambler. The gambler will do whatever he thinks is going to happen. I think something may happen. I'll just do if I see, rationally speaking, that I have a risk management to do it. Just simple as that. All right, so see you guys later. I'll make the video about Discord later today. Probably this afternoon. I'll explain you all those changes. So that's the plan for later today. So expect another video, but probably not until a few hours. Bye, guys.